I'm Matt Bouchard in San Francisco for NAREIT's REIT World, our 2018 annual conference. Joining me today is Sumit Roy, President and CEO with Realty Income. Thank you so much for joining us today.
Thank you.
Now, you've been with Realty Income since 2011 and were named CEO just last month. What do you see as the biggest opportunity and challenge facing the company in the near term?
In terms of opportunity, it's our size and scale. The team that we've put together has been instrumental in making Realty Income what it is today. That team has largely been in place for the last 7 years. And the strategy that we are in the midst of executing has been very successful. And our size and scale has been a byproduct of that execution. So, through the process that we have gone through over the last few years, the relationships that we've built on the tenant side has been instrumental in continuing to help drive the growth of the company. On the challenges side, I think we are oftentimes asked the question around e-commerce and being predominantly retail. How does that play into the mix? And 92% of our retail tenants belong to one of the three food groups. It's either service-oriented, low price point, or non-discretionary products. And we have felt that, by and large, having one of those three components to their business model has allowed them to be somewhat insulated from the disintermediation that has occurred on the e-commerce side. And we have fared relatively very well vis-a-vis some of our retail peers.
Now, what are you seeing regarding acquisition deal flow in your markets?
We just announced our third quarter numbers. We sourced $8.5 billion worth of acquisitions last quarter. Year to date, that number is close to $26 billion. So the runway to execute our current strategy continues to remain very strong, and we feel very good about what we are seeing in the sourcing and the pipeline into the future.
Now, lastly, can you talk a little bit about the company's balance sheet and any updates on how that's looking as you close out 2018 and head into 2019?
We happen to be one of only 7 REITs today that have 2 A ratings from 2 of the major rating agencies. In terms of our balance sheet, we have debt to EBITDA of 5.5 times. Our coverage ratio is 4.6 times. We also just announced a week ago that we had entered into a $3 billion credit facility, which was an increase from our previous credit facility, which was $2 billion. So plenty of dry powder, if you will, to continue to execute the acquisition strategy that we have laid out for the market.
Great. Sumit, thank you so much for joining us.
It's my pleasure.
For more from REIT World 2018, be sure to visit NAREIT's website, REIT.com.